Hey everyone, welcome to the Mora Group Market Update. Thanks for joining us. I'm Steve.
I'm James.
We have a lot going on this week. Biggest news of the day, the all-important jobs report came in, much hotter than expected. Employment rose by 336,000 jobs. They were only expecting about 170,000 job gain. They also adjusted upwards July and August, which doesn't help the rate market, but let's wait and see once they dig into the details and see how markets truly react over the next couple of weeks.
Yeah, definitely. Other news out there, we averted a government shutdown over this past weekend. So that was good news, at least for the next 45 days when they have to revisit it. And then shortly after that, they ousted the Speaker of the House, which is a first. So we will continue to watch how the markets react to that. Some other news that might be affecting your borrowers is that student loan repayments resume this month after a 3-year deferral. This will impact not only their monthly budgets, but also their ability to qualify for a home loan. There's more than $10 billion a month in student loan payments resuming. That being said, there are a lot of great programs out there to help ease this burden. So make sure your borrowers who might be facing this are looking into that and see if it's an option for them.
On other news, housing affordability continues to decline. That's a pretty simple math. Higher rates and home prices haven't gone down yet. We'll see what happens as the market continues its slowdown. We're seeing an increase in price reductions on active listings, however, so that could help move things along in the real estate market. As far as the direction the Fed is taking, before today's job report, it was anyone's guess. Now it seems more and more likely that there's going to be another rate hike in the not too distant future. There's also a general consensus that rates will remain higher for longer.
In good news this week, Fannie Mae did announce that they are reducing the minimum down payment on multifamily housing. Duplexes, triplexes, fourplexes, they need to be primary properties, owner occupied, but what used to be a minimum down payment of 15% on duplexes, 25% on triplexes and fourplexes are now going to be 5% down.
Yeah, 5% down is a significant difference. Let's see how that affects rates, though. Typically, the less down, the higher the rate, or the higher the mortgage insurance factor. So it's something we want to be excited about, but take caution on the affordability of it.
Turning our attention to something that we're seeing on the market with our borrowers that is positive is we are seeing a lot of seller credits being negotiated into our transactions. Seller credits are simply when the buyer and their agent negotiate with the listing agent and the seller on a chunk of money that they will get at closing to cover closing costs. That might be title, escrow prepaids, lender fees. It also might be to buy down the rate, whether permanently or through a temporary rate buy down. And all of that can significantly reduce the amount of money they have to come at closing and also potentially their monthly payment.
Make sure you're talking to your lender because it's really important. They know how to structure the loan so that you're taking full advantage of that seller credit. Thanks for joining us. Have a great October. We'll be back with you next month.
Thanks again.
It's so bad.
It's so bad. I hate it so much.